So I'll share my screen and then I'll walk you through the private equity business.
Sure.
Okay. My screen is visible, right?
Yes, Shivraj.
Okay, great. Okay, so are you aware about fund structure?
Fund structure is like a master feeder fund.
It's normal. I mean, let's say newly we are launching fund. How we launch it? So what would be the process to launch the fund?
Uh, f- First of all, we have to decide the business setup. We have to give a target on which company we want to make a private investments. Then we have to decide the amount, the total. I mean, the capital. Uh, then we have to. Target the individuals which we able to generate funds.
Okay. So what is the difference between hedge fund and private equity fund?
Difference is for private equity funds. It's like the fund will. I mean, the target companies will. If it is listed, then it will. Mm, it will first make into delist. After that, it start investing into the target companies. Work for 10 years. Then it will sell to as an IPO to a third parties. Uh,
See, make it simple. I'll make it simple. If someone asks what is the difference between hedge fund and private equity. First of all, we'll talk about private equity fund. Private equity.
yes.
Equity means ownership, right?
Oh, yes.
Private means limited people.
Limited.
So it means limited people will hold. Limited people will hold the ownership in a business
Business.
called private equity. So we can define like private people plus private companies, also public companies. If in future public companies they assure to the private companies which they can delist their securities and convert into private, or apart from that through different ABS and MBS route also. In a latest news you can check the S Bank, they have raised fund from the Carley group through ABS and MBS. So it means
MBS.
entire bad debts Yes Bank sold to the Carley group through ABS and MBS tranches,
Okay.
appointed one special purpose vehicle entity which can manage or to convert the entire loans into different tranches, and that tranches will be sell out in the market.
Okay.
So in short, private people, private companies, so it means you can target the private companies or also public companies through ABS or MBS, asset backed securities and mortgage backed securities instruments.
Okay.
Asset backend securities and mortgage backend securities, or
Securities.
loans, term loans, which you can say term loans. Through that you can raise the fund. Private people, private companies, public companies, but through ABS and
MBS securities. Okay.
MBS, you can raise the capital. If you see the structure, that fund would be your private equity fund. And apart from that, the most important part is illiquid. All the entire instruments are illiquid. That doesn't mean it will not liquid in cash. It will, but it will take time. When you
Right.
compare with the equity, that process will take time to buy and sell the securities. That instrument we called illiquid or OTC product, simple. So where you would see the liquidity issues. Over the counter product.
The derivatives part.
It's not about derivatives, bonds, ABS. That is a part. It is a part of
Uh,
OTC market, over the
okay,
counter
ABS
market.
and MBS.
MBS loans, that comes under OTC market, over the counter market. It's not about only derivatives.
Oh,
Asset
yeah,
backed
okay, understand.
securities, mortgage backed securities, or loans, or any other product. If, even though any other product or financial instrument apart from derivatives, if you see, so where that the product is not listed, that products will be categorized under over the counter product.
Yeah, yeah, understand that.
What is over the counter? Over the
That is
count,
not listed on the exchange.
it's a
That is,
table. Okay, this
yeah,
this one
table.
is a table, and here is the counterparts. So on table, which you can decide what should be the deal and all. Define the terms. It's like it's A and B. Directly they can take the decisions and make the deal. But if you compare with the exchange part, there will be your exchange come into picture, stock exchange, clearing house come into picture, which help both the counterparts to execute the trades on time or stipulated time frame. Maybe T plus 2, T plus 1, T plus 3, T plus 10. That is depends on the nature of the instrument. Right?
Okay, yeah.
Okay. So this is all about your private equity. Private equity. And what about fund then? Private equity fund. Again, same definition. Private group of people, rich or wealthy people, they will contribute the capital to the P fund, and then P fund will invest into the private limited companies or targeted companies.
Yeah.
And basically, so the important part here is the most of the equity funds they invest into the late stage companies, private companies, which they go means they will be listed their stake in the stock market in upcoming time, or else the risky companies. Risky, it means they have a high debt burden, so the P the target to these companies only to generate alpha for their investors. So it means risk wise also you can categorize the P funds are risky more than the hedge
The
funds.
hedge funds.
Always categorize, see, point wise, risk, nature wise, risk wise, nature wise,
Yes.
risk wise, return wise, right? And then other different terms, if you see, management fees, would be again remain same 2% structure, but this is like standard one. You would see increase and decrease in this percentage.
That is across same with mutual fund hedge funds and
Incentive fees.
adequate.
So here in a hedge fund we call incentive fees, and in a private equity
Of
there would be catch up call, but which is equivalent or similar like incentive fees. If it is a hybrid fund, then you would see incentive fees in a private equity also.
So this hybrid fund means the
It's
combination of
yeah,
private equity,
combination of the hedge fund as well as private equity, or it
private
can be
equity.
mutual fund as well. That depends. So it means there are 20 or 30% fund you can invest into that is listed securities, as well as the different illiquid securities as well. So that is depends. It's like a balance fund.
Okay. Uh, Sir, one questions,
Yeah, you
and then
could.
because I've gone through many videos and articles, so for the private equity fund, the fees incentive fees will be same called in the private equity fund also.
Standard structure would be 20%. Standard, it means it's a generic rule.
Generic, yeah,
2%
generic.
management and 20% incentive plus, but which again this will be differ fund wise.
Okay. So in private equity, it will be called as catch up
Catch up.
or
Your
incentive fee.
language would be like catch up call. First catch
Catch
up,
up.
second catch up, third catch up, fourth catch
Okay.
up. Then finally, if you see still remaining balance in the account, I'll take this. I'll take one example, practical example. Don't worry about it.
Yeah, yeah, sure.
Okay. So 20%, right? And that depends. And the remaining amount again, which you can distribute to the fund managers as well as that is investors in
Invest.
a 20 and 80% portion or percentage. So yeah.
Yeah, sure.
Apart from that, we'll see few technical terms which where you may expect question from that is private equity interview point of view. Okay, and then after I'll will jump on a practical examples where we'll calculate the different that is catch up commitment different things.
Sure. So actually, it's long, very long. I work in private equity, so it's
Okay.
been almost 9 to 10 years that many things would have changed. So that's the reason.
Okay. So few terms. So few terms like dry powder. So where you may expect question like what is dry powder? Dry powder, it means it's a liquid cash
Liquid cash.
or free cash which is ready to invest, which is ready for investment. So that happened like let's say we have requested fund to the investor and we have received fund now, and that fund is parked in a that particular fund account. So that cash we can call dry powder,
Okay.
but that is like liquid cash which is in your bank account, and that cash is ready for an investment.
So is it same as subscription?
It's not about subscription. it's
Capital
a,
call. I
it's
mean,
not about again capital call. You have received cash, and that cash is still pending for an investment from a
okay.
fund side.
Okay, got it.
Sometime that happen, let's say you have received dividend from a company, and that dividend is like in that the dividend is in your bank account that it to invest, or that the fund is ready for an investment. But if you see
Oh,
the position of that cash, that is in a liquid form now. If you want to withdraw, you can withdraw even, and if you want to invest, then you can invest as well. That would
okay,
be
sir.
your dry powder. In a normal hedge fund or mutual fund, we call free liquid cash or cash at bank. The
Okay, sir.
term would be
Got it.
cash at bank. So it means cash is free for an investment.
Investments. Got it, sir.
Then another term would be funded amount. funded amount. So what is the difference between funded amount and unfunded amount?
Uh, the difference is for funded amount that is ready for the investments. The amount which is ready for the investments is called funded, and it is from the capital call from the investors. For example, if the capital call is 100,
Let's
if the
say
cap
total commitment is 100,
okay,
right? Total commitment is 100.
100,
So we have received 50 rupees
50 rupees. That is
from
funded.
investor, correct?
Yes.
50 would be your unfunded. And here your total balance would be, outstanding commitment would be
50.
50. Outstanding to outstanding total commitment and unfunded amount, which you would see that would be in same line sometime, and the funded amount, which is would be something so which you have called from the investor, you have received as a subscription, in short you can say. Because finally you're going to charge your management fees on this amount. That's what this is important. Private equity, management fees, we charge management fees on this amount, 2% and divided by 100.
Uh, okay, sir. Sir, on this one, I have a little doubt.
Go ahead.
That it is from the total contribution. Somewhere I read this management fee is charged.
Yeah, total. But
Yeah.
if the fund is not received to you, then why will you charge and why the investor will pay to you? Important
Okay.
question is, let's say total commitment. You have signed term sheet. Let's say you take your example, term sheet. You have signed term sheet with me that you gonna pay 100 rupees to me in next 4 installment. First quarter 20 rupees, 25, quarter 2 25, quarter 3 25, and quarter 4 25, right? So you are a fund manager and I have committed to you that I'll process you 100 rupees to you, let's say in this way. Let's say this we are done with the quarter 3, so it means we have received this drawdown. Now you tell me, how will we calculate the management fees in this case? Because we know that the total commitment is 100. We have received 3 drawdowns or capital call, which you can say.
It would be on 75.
Huh?
The management fees, it will be on 75
Why?
because that amount has now been drawn on.
Exactly. So we were discussing same thing here, because so whatever portion that you have received funded, it means they have processed to us.
Correct.
See, once you invest, then you cannot charge management fees in private equity, because we charge management fees in 2 ways. Try to understand this logic as well.
Yes, sir.
One is AUM base and another one is commitment base. Asset under management. Probably you would see the structure in hedge fund, and this structure you would see in a P. Why? Why we charge management fees on the basis or on commitment in a private equity, and why we charge management fees on asset under management in hedge fund or mutual fund? What is the logic behind it? Because most of the fund Hedge fund, they invest into listed securities. And when you say listed, so it is easy to calculate fair value of securities
Oh yes.
on a daily basis. But what about private equity instrument? Most of the fund will be invested in
Unlisted securities. Hello. Or delisted securities. Yeah.
unlisted or delisted. Now you tell me. So this process takes time to calculate the value of securities, and that's what in a private equity most of the securities will be under L3 category, so level 3 category from a pricing aspect. Because for a fair value calculation we have a setup. L1 securities means level 1 securities, level 2 securities, and level 3 securities.
Okay. Yeah.
So most of the private equity instrument that will be categorized under level 3.
Okay.
Level 3 securities. Why level 3? Because we required valuation approach.
Valuation. Yeah, since the price is not available in publicly or any list, exchange,
Exactly.
that
The
is the reason.
price, fair value, that particular fair value of a security is not prevail in the market. For a listed securities, you can check the security price on a stock exchange. In case of a bond, again, you can, if the bond is tradable, you can again check that price of that particular bond in the market, right? But what
Correct.
about loans? What about ABS, MBS, and any other risky instrument? Or let's say the private equity fund, they have signed a different term sheet and they have entered through different financial instrument. It can be preference equity as well. Then
Yeah.
in that case, how you gonna calculate the value of that particular security? That is also important, and that's the reason if you charge fees on the basis of asset under management, so this price will not be a correct one, or this amount will not be a correct one. You would see different figure under asset management, and when you sell it, the price or that the value of asset under management would be something different. So nobody will pay. In a private equity investors, they will not pay the fees on the basis of asset under management if the fund nature or if the fund invested their entire stake into an illiquid assets. As simple as that.
Yes.
Are you getting me here?
Yeah. Yes.
And what are the different approaches? You can write it down as well if you want. Income approach. So what is that income approach to calculate future cash flows? For example, for a ABS, you can provide the example as well. Interest payment that received periodically, right?
Yeah. Current securities.
How you can calculate it? So we know that, like NPV method, net present value, apply the DCF factor.
Net present.
That's how you can calculate your net present value. DCF, it means this is your,
Discounted cash flow
yes,
method.
risk free rate. Actually, this one would be your risk free rate. RFR, it means it's inflation rate eventually. So in short, so whatever amount that you would received after 1 year, so you can just debit or deduct the inflation rate from that amount, and after that you can say, okay, so that is your net present value of your fund, that investment or cash flows.
Cash flows.
That
Got.
amount you can consider for evaluation. Another one
Got.
is another one is market approach. Market approach. Market approach, it means your all the fundamentals you can calculate. Means calculate the value by applying the fundamentals.
Fundamental.
Fundamentals. on the basis of revenue, on the basis of net profit, right? There would be different methods
Okay.
which you can apply and calculate the value of your investment.
Investment.
So probably in case of preferred equity or maybe equity, sometime you can apply this market approach method to calculate the value or fair value of that particular instrument.
Investment. Okay, sir.
And what about other approach, which is cost basis? So this one would be in case of your real estate equity fund. Real estate equity fund. Why?
Different.
Because land price. So how will you calculate the value of land?
Uh, we see the similar price of the adjusted.
Yeah,
I'm
in
not
that particular locality or area, so you can go and visit the new
what is the
local
market
yeah
price going on with that.
market participants or brokers and all. Ask them the price, and that price also you can refer it. But that would be on the basis of cost,
Cost.
right? So these are
Yes,
the
sir.
approaches which can be important. And apart from that, so the important one is ABS and MBS. So what do you know about ABS and MBS?
Mortgage-backed securities and asset-backed
How it's
securities.
work?
Um, that is a pool of asset from the mortgages.
Hmm.
Yeah, basically on a particular home loan or any other assets loan like that.
Hmm.
So in general, I want a loan for the home purpose. Okay, I
Yes,
approached the
bank
bank.
had
Yes.
8,000 crore rupees bad loans. 8,000 crore rupees bad loans. Bad, it means uh,
Depth.
they offered loan to the entities, but now they are not able to pay the loans to them. So that loans will take time to get recovered, right?
Yes.
But that's the reason bank was facing the liquidity issue. So bank enabled plan, which is, or that is the debt resolution plan. Debt resolution plan.
Resolution plan.
And bank decided to sell this 8,000 crore worth of rupees loan to the special purpose vehicle entity. So this can be, let's say, in any entity, XYZ entity.
Okay.
So XYZ entity purchased the 8,000 crore worth of rupees loans plus interest payment of that loans as well. And these loans were like mortgage loans, personal loans, auto loans, credit card loans, or different loans, business loans and all. Now this amount means this agreements, entire agreements. Why we call asset? Because see, the loans, it means bank, for a bank loan would be the asset, correct?
Hmm.
When the bank offered loan to someone else, for that borrower that loan would be liability, but for a bank it would be an asset.
Asset.
So now that asset bank sold to the XYZ entity, special purpose vehicle entity, and now special purpose vehicle entity will convert this 8,000 crore into different instruments. So it can be ABS, it can be MBS, or it can be notes. Who will buy this and why? P P funds will buy this, HF funds will buy this, or any HNI investor will buy this. Why? Because ABS offer interest payment. Risky ABS offer high returns. Low risky ABS or MBS offer low return.
Low returns.
That's how your mortgage backend security process works. And here, if you see, the important part is again bank will receive 8,000 crore new fund. 8,000 crore rupees new fund. So bank can again go into the market, issue the new loans, and again do the business and charge 15 to 20% return on new loans. or maybe interest payment. That's how bank can scale their business.
Um, this
Yeah.
third party is the fund which SPV sell is only through MBS and ABS, because that is backed by some assets like
Loans,
for
in
home
short,
loans. Yeah,
loans,
correct.
home loans, personal loans, car, credit card loans, auto loans. That's what we are calling asset. Let's say take example of that is mortgage property. Property, it means property, it's an asset. Bank funded to that property. So property received that fund. If something happened with that loan, so SPO can sell that particular property in the market and recover their money. And
Yeah, that is good with the mortgage, like the home loan. But
yes,
this personal loans or any other loan,
yeah, that's what
personal loan.
ABS here you would see the SPV vehicle will offer high interest rate because those are risky one in short.
Yeah,
If you see the high risk, then definitely there would be high returns.
high return.
On time to time, credit agencies will perform the assessment to check the credit score of loan holders and all, and accordingly they send the report to the investors or mutual funds or hedge funds or funds who have invested into that ABS, MBS, and through loans as well. So it can be term loans, which you can say.
Okay, sir. Yeah.
So any doubt in it?
Okay. On the last stage, this MBS, I mean, there are different parties for hedge funds, even with the mutual fund also. So they will purchase the MBS securities, and in return, they
Sorry.
will pay the interest.
Yeah, special purpose vehicle entity they actually manage because that the borrowers and all they will pay the interest payment to the bank originally, right? Then
Uh,
bank will process the interest payment to the special purpose vehicle entity, and special purpose vehicle entity will process the interest payment to the ABS, MBS, and note holders. In short,
okay, sir.
and that's why if you work in a private equity business, you would see the process which is trade process or settlement process, maybe trade processing or TLM business where so we work for term loans, ABS, MBS, preference equity, and common equity as well sometime. So where on a T plus 1 day basis, we book all the trades in the system. And along with that, if you buy any ABS as a buyer, if you're a buyer and if you buy the ABS, let's say face value of bond is asset back and ABS is let's say 1000 plus, let's say you paid 100 rupees as accrued interest, that would be your dirty pricing, right?
Yes.
Because this particular ABS will be settled with an accrued interest. And what about clean pricing? There is accrued interest, but you just purchase
1,000
that
rupees.
particular ABS with face value, which is let's say this amount. So this should be your clean pricing.
Got it.
Got it?
Yep.
Okay. So I hope you are enjoying this session.
Always. Yeah, yeah, actually. Yeah. So for the private equity funds, like you say, for the hybrid funds, it invests in, like for example, 10% in listed securities and the 90% with the unlisted securities. And in the private equity, only with the unlisted securities.
Private equity only with the
Unlisted securities, because in private equity we have like hybrid funds also. With the hybrid funds, that means it will invest in both listed and unlisted
yeah, that's what we
the
call
investment
hybrid.
types. Hybrid.
The
And the
meaning of
private
hybrid is like
equity,
something. See, pure listed fund would be the list. They invest only in listed securities. The similar way, if you see hybrid, it means, let's say P total capital is 100 crore or 1000 crore, whatever it is. So listed, you can categorize in this way: listed, unlisted, or delisted.
Yeah.
Let's say 80% you can invest in unlisted or delisted securities, and 20% you can invest in listed securities. This will be categorized as a hybrid one, hybrid fund. Simple.
Yes, I got it.
Yeah.
Yes.
Okay, the other terms, we are done with funded, unfunded. We are done with ABS, MBS. We are done with
Brad.
private equity concept as well. What is private equity exactly? Okay. Then, what
Valuation
about
approach.
principal pay down? Principal pay down. Principal, so it means main capital. Principal means it's main capital.
Main capital here.
Let's say a investor sent the 1000 rupees to the fund, and fund received it. P fund received it. But after 1 year, fund received proceeds from the XYZ company. So now fund received some amount. So fund decided to repay the principal amount to the investor back. Not full amount, but partial amount. That's what you would see the pay down terms like partial pay down and full pay down.
Full pay down.
Full pay down, it means you can pay entire 1000 rupees. So net outstanding would be 0.
0.
If you see, this term would be your full pay down. Full principal pay down.
Yeah,
If you
got
see
it.
only partial pay down, so it means 10% of this amount, so which you can apply the principal pay down. So only
100 rupees.
100 will be, that is, you can debit from your system. Net outstanding would be your 900.
100. That
This
is
is how
outstanding.
your principal pay down will work. Why? Because the fund will pay the interest payment on this portion only. Going forward, or from now on, fund will pay the interest payment on this amount only, not the paid one.
Yes.
And when you apply the pay down, so this notification will be sent out to the agent bank, and then agent bank cash management team. So they actually verify your now current job. It seems like same, to review that the notification which you have received, right, and accordingly you can disburse the fund or transfer the fund.
That is the main principal amount.
Yeah, main principal amount to the investor's account. So you can debit from the fund account and credit to the that what I can say, investor's account.
Investors.
Or it can be, this can be related to fund even. That is, depends on the structure of a funds and all. But the pay down, it means your term which work in this way.
Okay, sir.
Then we're done with pay down. Okay, so what about capital call and drawdown?
Capital call, when the fund requires amount, capital amount, so it will ask the investors to deposit money into the fund. That is capital call, as and when required.
Yes, total commitment, let's say 1000, and it was signed or agreed that the investors will pay total commitment in different stages. Let's say quarter 1, quarter 2, quarter 3, quarter 4. 250, 250, maybe 400, maybe rest 100. If you received this portion, you can call it as a capital call or drawdowns. But before receiving this fund, what we do? We draft an email.
To investors. Yeah.
Yes, dear investor, fund name, date, right?
Yeah.
Then amount, how much amount that the investor agreed to pay at this time or maybe by this date, the due date, right? So you can provide everything in that particular email to the investor. Along with that, you can provide bank details as well. And apart from that, if you are calling the management fees, you can highlight management fees or any other fees, let's say partnership expenditure and all. So you can invite or you can draft each and every details in the email and send it to the investor. So
Okay.
maybe
So the
investor will
purpose of
pay
the capital
250
call.
plus your different fees amount as well. So after that, after confirmation, you can interpret that information and prepare the accounting entries accordingly and record it in the books of fund and allocate to the investor's account and as well as fund accounts as well. That would be your job.
Okay. So, for how many days before we have to send an email, like in normal accounting
Standard
scenarios?
process would be like before 14 days or before 2 weeks, you can send an you can send a reminder to the investors 2 weeks before the due
Okay.
date.
This due date.
Because if you miss the due date, and let's say that fund manager committed any counterpart that the fund manager will disburse the payment to that particular entity. So in that case, see, everyone is obligated by the terms, right? That's what you signed the terms it.
Term sheet.
Correct. So penalty can be imposed on the counterparts if you see the delay in the process of payment. Because eventually, as a fund, let's say I'm a fund manager, so I have committed to the TCS, let's say, that I'll process the 250 crore to the TCS on this particular date. And if I don't process the payment to the TCS, then TCS can take a
Fine.
objection against you in the court.
Okay. Yeah.
So there is a legal procedure as well. And that's the reason you cannot do that. And your job would be same. Make sure before the deadline you have sent an email to the respective investors. So at least on a due date, you're gonna receive payment from the investor, and again from a next date, let's say effective date, because from a next date investor can calculate the accrued fees, that is accrued preferred return in the books of investor. So investor management team or maybe allocation team, so they can start to accrue the interest payment or maybe accrued return or internal rate of return in the books of investors also, or as well as in the books of fund. The similar way, the fees team, they can accrue the fees if the fees is accrued, or let's say the fund manager, investor, they have paid the fees along with the commitment, then you can say you have received fees in advance. So that the fees team, they can apply the prepaid fees accounting treatment to the that particular investor's account as
Investors.
well as to the fund's account. Try to understand this as well, because there is a dependency. So once the fund hit to the fund's account or escrow account, then entire picture, that the different processes come into picture.
Yeah, like accrued management fees, accrued interest.
Exactly, the
Yeah.
subscription, redemption, call, drawdown, pay down, and number of things would be come into picture, as well as the disbursement. Right, funded, it means you have received fund, but from a fund side, when you fund, when you send fund
Uh,
to the investing company, that would be the funded part for you, right? From a fund
yeah.
side, I have funded. Even in news as well, you would see So XYZ fund funded 1 crore, 2 crore, 3 crore, 1 million, 2 million, 3 million to us, right? Maybe
Yeah.
angel investor funded. Funded, it means that business owner or
The fund,
entrepreneur or team, they have received fund, committed fund from the fund, equity fund.
the fund receives the money from the investors. Like
Yes. So if you see the cycle, if you want, I'll draw this as well. Investor, let's say they will send 1000 crore to whom? To PE fund,
P fund.
minus, plus, and again investing company. So you can minus, finally fund will receive here. Let's say this the fund received to the GMT Academy. So fund manager will say, okay, so we have funded to the GMT Academy. And investor will say, I have funded to the PE fund.
To P fund.
See this term. At a different level, which you would see the different meaning. But the process should be remain same. So investor funded to the PE fund and PE funded to the GMT
Investing company.
Academy.
GMT. Yeah.
Okay.
Yes, sir. Got it.
Then what about limited partners and general partners?
So limited partners are basically the investors which invest into the fund. They are limited by the capital which they have contributed, and general partners are the particularly the management of the PE fund. General partners are like the founding partners,
Yes, fund
the
managers as
fund
well as
manager,
I can say fund sponsors
fund sponsor.
or fund promoters. You would see fund managers or general partners can be different sometime. GP and FM can be different. It's like a CEO and promoters of the business.
Promoters of business. Yeah.
You can relate in that way. Can be different. Okay.
Yes.
Then what about preferred return?
The prefer it is the return which the private equity, I mean, the return of the investments in a private equity fund.
Preferred return. Preferred. If you see the structure of investment, if you see the structure of investment, private equity invest into
Companies.
loans,
Yeah.
bonds, preference equity, and other one would be ABS and ABS. Or any other term, it can be any other term. All this instrument carries preferred return or fixed return, I would say. If you see the nature of preferred equity, carries fixed dividend, correct?
Dividends. Yeah.
If you see the nature of the bond, carries fixed interest or
Interest.
coupon. Loans
Coupon.
carries fixed interest payment. ABS and MBS carries fixed interest.
Interest payment.
So combinedly, you can call preferred return, fixed preferred return. The standard definition for preferred return is the ratio should be at least 8%, which can beat the inflation. So it means
Yes. Yeah.
investors can expect minimum 8% return on an annual basis or year on year basis. At least 8%. So this 8% can be 8% can be simple or else compounding.
Okay. Yeah.
Compounding, which you can call cumulative, word
Cumulative.
you would
Yeah.
have heard in PE,
Yes.
cumulative basis. Let's say the total amount is 100 or 1000. So 8% for per annum would be 80 rupees. This would be paid to you
Yeah.
every year. Actually, in a reality, in the fund will not pay this. That's what we accrue this amount in the books of fund, right? And
Yeah.
how we accrue this 80 divided by actual days divided by 360 days. This convention which you can use, right? 80 directly, 80 divided by 360, whatever would be, it would be for per day,
Per day. So that will accrue daily.
that and into actual days. If you want, you can do the calculation in this way, and that's how you can also record the same portion in the books of account as well. Here you can apply the accrual based accounting treatment for a preferred return. Accrual based accounting treatment.
So yeah, got it.
Correct. So what about compounding then? Simple, yeah, I got to know that okay, so 8% will be fixed, so which will be paid, or maybe that I can accrue in the books of accounts so every year. So I can do the accounting for 80 rupees and then done and dusted, right? At the end of the maturity, so the investor will get paid principal plus preferred return amount, whatever it is. Correct? If it is for
Yeah.
4 years, let's say the investment was for 4 years, 80 into 4, right?
Yes.
320 plus 1000.
The principal amount. Yeah.
Exactly. So this will be paid. So this structure would be in simple way or in a simple preferred return style or theme. If you see the theme for preferred return, that is cumulative basis or compounding basis.
Accounting.
Now you can open your calculator. For a first year, let's say first year, if you calculate the return, first year,
80 rupees.
8%, 80, right? So
Yeah.
you can record that in the books of P.
That's an interest. Private equity.
Okay. Second year, total value would be,
1000 plus 80.
so you can charge now 8% interest on this portion. Now tell me the amount. 108 something? No,
One,
would be different, I think.
I would have calculated. I'm just 86.4, no?
How much? 86.
86.4.
Third year, we'll do this. Add this amount,
To
this
the
and
interest.
this.
Yes. Yeah.
116 something.
1166.4.
1164.
That's one. 4.
Great. So it means 8% would be on this amount. Now calculate and see the difference. So it means this would be this treatment that we apply under compounding
Compounding interest.
preference return. This is the difference. And you would see the difference in return as well. So this portion would be high.
The compounding would pay a largest percentage of preference
Exactly.
interest.
Compounding is always better.
Better.
And apart from that, if you don't want simple, if you don't want compounding, so there are funds, different funds, especially let's say there is one single largest investor. In that case you would see so that the investor don't require this is preferred return and all, right? So that investor required the directly percentage, the direct percentage of that particular profit. Let's say if investor invest 1000 rupees, this was the call, and at the time of distribution company received, let's say, 4000 rupees, and this particular fund received on means this was the original investment, right? Call, it means original investment,
The original
and this process, it means distribution, which is the redemption value.
redemption.
So directly this value will receive to the investor. In this case you would see the fund managers can apply the incentive fees directly, or maybe carried interest directly
Directly.
on this process. First of all, just pay the invested capital. The remaining would be this. So split this 20%, which can be processed for fund
Keep for
managers or that GP, which you can
managers.
say, and 80% which can be processed to the limited
And
partners.
limited partnerships.
This is how you can process it, and this structure basically would be under internal rate of return. So whatever returns will receive to you, you can directly process to the investors.
Okay. Okay, sir. The total, uh, the return would be distributed based on the 20 percentage.
20/80 or depends. So see, this is a
Depends, yeah.
standard structure, but
Yeah.
in a reality you would see different ratios or portion, right? It can be
This is
90/10,
90. Okay.
it can be 5/95, it can be 60/40, it can be 50/50. That is depends, because everyone in the market is like they are looking for a alpha value. Even though nowadays there is a boom in this industry for fund accounting, so what we are doing then, we are also doing the same thing. We are looking for a job change because we want 30-40% hike, 60% hike. The similar way, that is depends. See, market rate is 30%, but few companies that are offering more than that as well. That doesn't
Oh,
mean
yeah.
government will penalize to them. It's a customized agreement between your company and you.
Candidate, yeah.
Correct?
Yes, sir.
Generic ratio is 30% hike. But there are companies who are offering more than 30% as well. And there are companies who are offering less than 30% as well.
Yes, sir. Yeah.
Okay.
So, okay,
Yeah, go ahead.
distributions. So distributions. So this on 3000, the distribution has to be paid among this LP and GP, no? Not on the fourth. Internal rate of return is the difference between this one, the return and the what capital contributed. No, you
Sorry, come
mentioned is
again, come
four.
again.
You mentioned 4000 as a IRR.
4,000 not as IRR. So return means it means total proceed that the fund received.
Huh, correct. From the investments.
Yeah, from the
Out,
investee company. Correct.
yeah,
So
out of that, thousand is the capital investments.
yeah, call
So,
return that first, and whatever
yeah,
portion would be this portion, which is you can call internal rate of return.
yeah, okay, 3000. So
So
that will be
almost
distributed among the LPs and GPs.
yes.
Got it, sir.
And in the previous case, if you see the same example, so we'll do it with a simple one or maybe the preferred one. We'll do with the simple one. Let's say
Yes.
call amount. How much it was, right?
1000 C.
Investment amount. ये कंपनी प्रोसेस to the fund, which is 4,000.
1000.
After 4 years, this would be the line. So which you need to interpret. Okay, so it means this amount 1,000 was invested 4 years ago. 1,000 was invested 4 years ago, and today we have received profit from a XYZ company or A company. Now you can initiate the distribution waterfall. Distribution waterfall, it means it's a redemption process or return of capital process.
Return of, yeah, that means.
Right? And let's say the fund committed simple return, which is 10% per annum. Simple returns or alpha for per annum.
Per annum.
It wasn't compounding. Calculate. 1,000 into 10%
100
would be 100 for per year, right?
per year for 4 into 4.
For per annum, correct?
Yeah.
Then into
Into 4.
4 would be 400.
400.
Then initiate the distribution. So you have received 4,000. That fund you have received in your bank account. And that's what you need to send the instructions to the bank, that how you can distribute that fund and send it to the across different counterparts. It's your responsibility now, because you are going to join the P business. So now you have, let's say in Excel, you're doing the calculation. So now you have received 4,000. As per the committed thing, so you can return the capital first, call amount, which you can say, right?
Yeah. That is the first thing.
Yeah, would be then 3,000 would be remaining balance.
Remaining.
So on which you can return the committed preferred return. Preferred return. Correct?
Yeah. Yes.
Then on which,
2600.
so remaining would be 2,600. So
100.
here you can charge, you will have a two option here again. One, you can charge preference, sorry, I forgot, what was that name? Incentive fees, performance
Incentive
fees or
fees.
incentive fees, which is 20%. If you want, then calculate it and tell me what would be the amount, so we can complete this example. 2,600 into 20%,
520.
26,520, right?
520.
520 would be your incentive fees. If you don't want to call it as incentive fees, then you can call it as a catch up as well.
Catch up.
Catch up call. Then what would be the remaining amount then? 280 something, right? 2080. So this portion you can directly split 20%, calculate it and let me know. 20% to the GP and 80% to the LP. Let me know the amount. Calculation would be like 280 into 20 divided by 100. Two zero eight zero. It means 486.
480.
No, sorry, 416.
416.
20%, right?
Yes, 416.
416, and remaining would be just minus it, 20280. So 416. So 2080 minus 416.
Six.
Remaining now, let me know.
Opening calculator.
I don't have a calculator, but I'll still try it.
Minus
So
one
it
six six four.
16
1664.
1664. See this profit which will receive to the investors. This should be your last leg, which you can say carried interest. In a private equity business, because last leg, which was the remaining amount, you have split it into 20% and 80% portion and transfer it to the, because after this calculation you will have to send these instructions to the bank as well. So first of all, you're going to record this into your internal system in the partners book, so you can allocate this profit to the partners account, 20% to the GP, 80% to the LP. Then after, the instructions will be sent out to the cash team, or maybe that is agent bank who is supporting you, or to the fund for cash activities or cash operations. So accordingly they can process the cash to the investor's account as well, or maybe different counterparts who are involved in this business. And then your job is, after this, you can close the fund or you can close the deal as well. That is depends.
So yeah, but somewhere I read that carry interest is given to, yeah, as you told, like GP to match the amount paid to the LPs. So what does this statement mean actually?
Sorry.
No, the somewhere I read that this carry interest is given to the general partners to match the amount given to the limited partners.
So match it is, so it's not about that match and all. So simple here is, see, first of all, return their capital and preferred return. It could be simple or commit, that is cumulative.
Correct. To the
After
limited
that, whatever
partners.
proceed, if you see, the fund managers, they are investing their time, they're investing their efforts.
Yes.
They are also supposed to receive that contribution, right?
Yes.
That's what your job is to, as per the agreement, you can calculate and process that particular process to the general partners and as well as to the limited partners. But sometime, wherever if you see clawback term, in that case you would see this particular term, which is you need to match it. Means whatever proceed that you have received, let's say in first investment you have the fund managers, they have received this proceed, if you see this portion, right? And even though they have received this portion as well, incentive fees plus
Catch up.
proceed, catch up call plus proceed, you can
Second.
say, or carried interest. So in this
Catch.
case, investor received carried interest as well as catch up call, sorry, fund managers. But in next company, let's say that investment value 1000 value become 500. So this value become 500 and only 500 received to the fee fund from B company. In this case, how will you process it? Now you tell me.
Capital call is 100, of the proceed is 500.
500. So distribution received, which is 500. So it means there is a loss of 500, right?
500, yeah. So that means only the 500 will be firstly paid as a capital call to the investors.
Investor. The rest amount, it will have to do something. So it means here in this case, investors can raise the clawback situation against you. Okay, why clawback? This is also important because in the
Returns.
first investment, fund managers received almost how much? 520 and 416. So this proceed you have received. So from a carried interest, you can pay some amount to the investors to offset the losses or maybe tax liabilities and other expenditures.
So that means in the second year, if the fund offers a loss, so the general partners has to pay the limited partners of the previous year profit.
Previous year
What they,
profit or proceed, you can say whatever
yeah,
contribution
proceeds
was received to the fund managers. So
fund
they will
managers.
have to offset the liability, not fully. There would be portion, maybe 2%, 3%,
Yeah,
4%, which the fund managers can, yes,
offset the loss
yeah,
to the
offset the
general
loss
partner
or help to
LP.
offset the loss, not fully, but okay, this is important one, not fully one. From incentive fees, they will not offset anything, but from a profit, so it means carried interest. From a carried interest, so how much was the carried interest? 416. So from a 416 amount, so you can, means as a fund manager, so you can help investors to mitigate or offset their losses. Or it can be general expenses as well. Let's say due management fees or any due fees, audit fees, legal fees and all.
Legal fees for the current year. Yep.
Yes, for that particular period or current year. That can also happen. That's what clawback it means. Investors will raise the clawback trigger. Hey, we want here we need some assistance because we are now in a loss.
Loss. So there
So
are two things. Instead, they will compensate the loss, or either they will pay the current year management fees, incentive fees, all those
that
things.
depends if
Yeah.
maybe they can pay the expenditure, maybe they can pay the liabilities, tax
Yeah, that is
liabilities, it can be anything,
yeah, that
but
is
that
what
will
should
be
mention
defined
in the
in the term sheet
term
or
sheet.
agreement. But
Okay, sir.
important here is if you observed, this was your deal by deal model. Firstly we discuss about A company proceed and then we discuss about B company proceed. So it means it was American waterfall model.
American is deal by deal model.
Yes, if you process or if you calculate the profit for every individual company, let's say there are A company, B company, process will be remain same. There is no change in it. C company and D company. Here you have received this portion, so you have processed it. Here you have received invested amount is this. You have received 500.
Fine.
Here let's say you had invested same and received 250. Here you have invested same, you have received 3000. So this would be a deal by deal model. So it means whenever fund will receive this profit, fund will initiate the distribution process. This distributed. And these two are
Okay.
pending for distribution.
Yeah. So in this case, the profit in deal by deal can either be possible that the proceeds from A can be offset
No, no,
with.
no, no. This will be done early, na? That's the process.
Okay, okay.
So whenever this will be done at first time.
Uh-huh.
Whenever you received fund, then you can initiate this distribution process for B. Then you can initiate for C. Then you can initiate for D.
Oh, yes, yes.
And that's what they are raising means concern on clawback. So which they can ask for a match or sometime match it means. So whatever the commitment, see, sometime of the general partners they also send their commitment, right?
Yes.
So in that case, you will have to match it. So it means you need to ensure that you are processing whatever the profit that you have received equally to the general partners as well as to the limited partners as
Limited
well.
partners.
In that case,
Got
you
it.
can say, okay, so you can match it. So it means, let's say the fund here, the contribution, if you see in this way, GP contributed 800, limited partners contributed 800, GP contributed 200. So you can match their profit. If you're processing profit for this amount, then you will have to process for this amount as well. Match this. So you cannot say that only you will process for 800, so you will not process for 200. No. They have also invested. Their money was also invested for 4 years. And that's what your responsibility is to match with limited partners. Whatever proportion that you're going to pay to them, it should be processed to the limited partners as well, that general partners as well.
Jennifer. Got it.
In that way, you can say it, okay, so now I need to match with it. Okay. And this model comes under like American waterfall model, American distribution waterfall model. What about European?
Uh,
Sorry,
on a
European.
single
Are you aware
European
about
model.
European one?
Yeah, I know. That's a single base model. So when the deal is done, it will be closed out.
It's very simple. So entire investment would be 4,000,
1,000.
right? 1111. And whatever the distribution that you have received, let's say 10,000 you have received. Let's say first time you have received distribution for that proceeds from a company, whatever amount is. Let's assume 5,000. Here that you have received 2,000.
Yes.
Here you have received, or it will receive, let's say 1,000, and here it will receive around 2,000 till the amount you get from a last company. So you cannot initiate the proceed, or else apart from that, the another unique way is in an American model we calculate the catch up as well, right? From a deal by deal, whenever we received proceed, we calculated catch up, and
Okay.
that is carried interest, right? Here you cannot do that till the repayment of principal, which is 4,000 plus 8% return, or maybe 10%, the whatever the ratio would be.
Yeah, preferred return.
Return this entire capital. If you take the example of this, $5,000 profit we have received. 4,000 was the original investment in all four companies, right? And 10% was the profit, that the preferred return, let's say.
Preferred.
If you calculate 400, 4,000, 10% would be your 400 into, let's say for 4 years, would be around
1,600.
1,600. But if you see, you have received profit only 5,000.
5,000.
Return the 4,000 first, the remaining would be 1,000. Return this portion, so it means at least you can return 1,000, right?
Yeah.
And minus should be around 6, or you don't need to highlight in a minus way, but pending would be around this portion. Let's say from a B company, we have example, we have received 2,000, right? So from a B company we have received, let's assume it 2,000. So then from that profit you can first of all pay 600, rest would be like 1,400,
1,400.
and here you can calculate your catch up first. First catch up, then carried, you can calculate everything here. And rest company's investment, this and this, whatever that amount would be, directly you can split 20 and 80,
80.
like carried interest.
Oh,
Yeah, we can talk for 10 minutes. I have a call.
okay, sir.
Okay.
So
So
this would be
generally,
your
I
European
got
model.
your paying on teams,
Okay, sir.
and I saw that
The deal by deal
discussed
American
what is
model
the
is
required
simple to
detail.
calculate.
So
Yes, for
each of
every
the
deal you
email
need to
separate
calculate.
email.
Yeah, each and every deal.
On the first email, the
So in
requirement was
European,
put.
all the
On the
deals are
second, what
combined
this
and
is
the returns are distributed
basically
accordingly.
around
Yeah.
automated controls and
Okay.
Excel document around items
Now
that I
I'll
have
walk you
basically
through the
doing the
different
operating
things
statement
then.
and the report or output that it is showing. I understand that there is no
If you
report
see the
as
structure
such,
or different
but
agreements,
what the
so
idea
SP, it
mentioned
means
to me was that
security
there are
purchase agreement
overlays by
between
which
fund
there is
managers and
actual
investors. PPM again, agreement
it could be
between
that
fund
you have
business
had
and
section
investee companies.
in IBAN
Term sheet,
and it
you
is
can also
probably
sign
that you just
with
select
investor as well.
drop down
Defined all the
or
terms about the scheme.
This,
Okay.
then there would be you have to click something basis which all the breaks
So if you
So
have
what
anything,
is what exactly
let's
it
see,
is
you are in a
or
plan to
there
launch your scheme, so
there
you
what's the
can then
exceptions related
definitely you
to
can
the
register under
when
Companies Act,
what
form the
exactly
LLP,
would be that?
Exceptions
Because
means
then
what
discuss with the investor,
the
disclose
breaks
all the
yeah.
the
terms,
breaks under
risk,
loan by IMAS are
duration,
automatic.
investment objective,
So your work
and
actually
accordingly
starts.
you can
So I
sign
don't
the
think there's any
PPM agreement as
automated
well.
part of this particular
And
process.
including that redemption, drawdowns, paydowns, all terms we have
Yes.
So we
discussed.
cannot
Carried interest,
look at
waterfall,
data,
distribution,
Sharma, because
right? Everything,
the
Yeah.
preferred
term is
return,
huge. That
which you
cannot
can
look
define,
this.
and then after you can sign the
Yeah, yeah.
PPM, and
Because
then you can
I
announce,
just
okay,
need
now
I just need the report
where the
name. So
investors they
what will
have
happen is
committed
I will
us
then
to process the
document
payment
this
to the
as a
fund.
automated
Okay.
control
Yes.
that there is an automated
Right.
functionality within
And then
IMAS
finally
that
you
IMAS is doing
can,
a
let's say you have a
reconciliation
fund, then it's a
But
mandate to
there is no
going
have a
to
report
take
demat
as such.
account,
We just
I
then
got to
cash,
see in
that is
advance
your bank
the data
account,
which is
right?
left in future.
Which you can
Means
see
Yes.
current
when
account
we are
to accept the
lending
payments
for
or to
that
process the
balance sheet.
payments to the different ones.
so let's say when you open IMAS
Okay.
there would be let's
Then
say what is the
appointment of
updated
broker.
data for a
Why?
particular day or what is
Because
the
you cannot
dates
easily
that
buy and sell the
The
securities in the
see
OTC
what we
market.
do
So you
is
should have
what
a
we do.
prime broker account, right, which
There
can
is
help
a
to
department code.
buy and sell the securities easily in the
We work
market.
for
Because prime brokers they
okay. So
carry the
whatever is under
contact or
futures, we need
details
to
or
reconcile
information about the
them
different
or
counterparties as
match
well.
Contract.
them or
Yes.
getting
So they can
confirmation. They
help
do
you to
everything
buy
from
and sell
our
the
side. Okay,
securities, and that's
automation is
what they
done by
charge
IT.
broker
So it's kind
brokerage
of
or
a IT related job. We do only manual matching. We do not process any
no, no,
matching.
I know, I know, I
Brokerage.
know.
Okay.
I know. I'm only
brokerage
looking
fees,
at the
commissions,
automated part
penalties,
because
other fees, broken deal
we don't
expenses,
have any role to play
then
here.
all other
The
things
only
which
thing
you
is
would
that
see
I
here.
reached out to the telematch IT
Correct?
people and they
Okay.
said
Yeah.
that see from our perspective,
Then
there
transfer
are like
agents. So
thousands of
transfer agents in a private
state
equity
banks in
business, you
IMAS
don't
because
require
they
any
do the
transfer agent
settlement.
as such if
So
it is a
business
core
would be
private
growing,
equity
but
one,
that will
because
tell
we
you the name of the report or
sign the term sheet
name
with
of the
the
like
investors,
there would be
right?
Investors.
something.
And
They also
accordingly they
said that
process the
okay, we
payment to us, and
understand that
that's
there
what
is
fund
no
accounting teams, they
PDA
actually, or
information
maybe
about state
investor
profit share,
allocation
right?
team,
That is
the different
standard
names
IMAS
you would
thing.
see in the
I
project,
updated what
investor allocation
when
team or
the
maybe
IT
investor
people said
relation
I just
team,
need
so
some
they can
reference
initiate
that
this
what do you
communication
go and see on IMAS? Is there a
Okay.
drop down that you
for us,
just select
that is
basis which the breaks
call
volume
and
just comes
distribution
on your
part.
screen
Part.
comes in
Yeah,
automatic? I just need the name.
probably when you
So as a fund
select
accountant,
the
we also have
department,
to,
everything under that
I
department
mean,
comes
post
on one screen. For
entries
example, if you
and call
are
for the
futures,
distributions.
doing
Yeah,
futures, so
record. You will have to
everything under
record it
futures will come.
Okay. No,
accordingly.
Doing
as
OTC,
they
there
as they put in
are
a separate team,
four
like
departments, four to five departments
That
like
is
working on
depends.
it.
If it is end-to-end
So you
model,
need
then
to
you will have
select
to
one
do it.
particular
There is no
okay,
department to
option. If it is
reconcile
not
it.
an end-to-end model, then you would see the
Probably
separate team for a different
Okay,
it
activities.
depends. Like there are multiple
okay,
balance
sir, got
pool.
it.
Those are
That is
not
depends. So I don't have any
under
control on
F&D
that part.
but
If you see the
are
different teams,
for
then you will have to
F&D
work.
reconciliation.
There are people
Those are not directly
they
tied to
raise
F&D
concern to me,
first
sir. I
to
joined fund accounting
in one
project, but
pool.
I'm not
So
working
we
in a
cannot
core fund
say that
accounting team.
these
So
are
I'm
for
supporting only
F&D
cash operations. I'm
and
supporting only trade
these are not for
operations. I'm
F&D.
supporting
Okay.
only that is
So
investor
we
relations stuff
reconcile whatever
to
is
check
there
their
in
investor
our
names and
department.
all under
We
different
reconcile
funds and
that as
update it
well. And
accordingly and confirm it to
apart
them
from
or
this,
prepare
there
the report. That's
are
it. Your job
The
is
multiple
done.
teams are
reconciliation we
segregated,
do
so
it by
like we
searching
That
don't.
other
depends.
departments
Yes.
as well.
Then, but yeah, the
There are
important is
breaks
you will have to appoint one
which fall
transfer
under
agent as
other
well.
departments
Then agent
where we
banks.
do go
So it's
in their
bank account
department
is
and
required. So you can
reconcile that,
appoint
match
JPMC,
those as
MS,
well.
Axis Bank, ICICI.
So
So
there is
fund
no
can
hard
open
and
the
fast rule
bank
that this is
account with
for
a
F&D
reputed
and we just
bank. So bank can
got
their
a
team
drop down
dedicated.
and
So bank will
hold
provide you
F&D
dedicated
terms.
team support.
Yes, we do that,
So
but
accordingly
that's
you
not
can
in the
manage your
future.
cash operations as a fund manager or
Those are
Got
maybe
it.
part of
equity
our
manager,
breaks,
right? So
but
that's an
Yes.
we need
important
to go
one.
to other
And that's what
department,
bank
then
charge,
dust
your
it off,
bank charge, agent
and
fees,
then whatever
then
is
transaction
left,
fees,
we
assignment
reconcile.
fees, maintenance fees,
So,
and different other fees.
Fees.
as a
Yeah.
glitch, I
Okay.
cannot say that
See,
it's
but when you
Then
say that you go to
custodian.
other departments,
Custodian it
that
is
is
required. When you
for
purchase
banks, but
something, there
breaks have
should be
already
someone
appeared,
who can
right?
take the custody of
yeah,
your
right.
securities. So
That
Okay.
ensure that custody shouldn't
no,
be in
no.
the books of
I am
fund
talking before
with the
your
fund.
matching starts.
So which
Basically,
carries a
let's
lot of
say
risk.
let's say you open
So fund
doing
managers
spend time with
For
the
example,
can
client.
I'll just give you today's
can
example. Okay.
you
So
know
in global
do the
Costco,
malpractices in the fund
in
business
morning
then
we
if there is
have
no
around
control, correct?
4,000 count in
Yeah,
global
okay.
Costco. Okay.
That's what. So
So
custodian come into
we
picture. So
see
you
as a
need to appoint
4,000,
custodian
but
as
there
well,
are
and
actually
that's how
10,000 plus
custodian
count of
charge
places,
custodian
because
fees,
there are
safety
multiple
fees,
plays
and
which
other
are followed in
fees.
the other
and
fund
any other
and GRS
commission or
has to
charges as well
features, and
to
then
the
they do
fund. And that's
automatically.
what that also we record it in
But
the books of
apparently
account.
there's an IT issue, and
Then
after
trustee or
feeding, it
board
needs
of
to be
trustee or
increased as manual
any other
batches
institutions
to
can
get
work
all
as a
those
trustee between
10,000 matched
investors and fund.
manually.
So which trustee can monitor all
So
the
there's no
activities.
whole picture like
All
we
the
see in
activities.
futures. Yeah,
It's
you can
like a
see that
shadow
after
accounting.
matching,
And
whatever
they
is
report it to the
left in
investors as
future
well
that
as
we are going to
different
investigate,
counterparts as well.
that we can
And they
bring
ensure
in
that
monthly
there
reports.
is
But
nothing,
the
you know,
data which is coming in
uh,
from
there is
client side and future
nothing
side,
kind of
that we
any
cannot predict.
suspicious activities as such.
This. Okay. Yeah.
Then
So
appointment of
discussion.
The
auditors
data
that
is
we
huge,
know
the count is
ENY,
huge as well.
PwC, KPMG, they offer the auditing
No, no.
services.
See,
So
I get
maybe on a
it. I
monthly
would
basis,
want
quarterly
the
basis, that depends. So maybe on a
entire
daily
data.
basis, we submit funds to
I
the
just need
auditors
the report name. But you're saying
for
there is no
auditing or
Whole
report.
report,
monitoring
yeah.
Report in
purpose.
the sense,
And
I
after
get it.
their
I get
approval only,
about
we
it. There is
publish the
no
net asset
report per
value of a
se.
fund to the investors, if I'm
It's
not wrong.
You can say
So
just
for
feed
auditors, the
feeds, you
reports are
can say.
present
There's
for
a
private
feed
equity.
from
I mean,
GMI
quarterly or
that comes to
the
Quarterly. Most of the
quarterly.
private equity
there's a
funds,
matching
they
data
publish or
yeah.
which
calculate their
comes
NAV on a
from
quarterly
client
basis.
and
And if
agent
it is a
batch
Right.
hybrid
from
one, then it's
investors.
required to calculate
There's
on
a
a monthly
feed,
basis.
okay,
Monthly
and
basis.
these feed comes from
Accounting will be
multiple
done on a
reports
daily
that
basis,
IT runs on
but to
daily basis,
calculation of
okay.
actual NAV,
There is no
that would be on a
particular report, or
quarterly
there is
basis in a
no
pure
client
private
data.
equity fund.
They
So,
do
but on the
the
NAV
client
part,
data
as I know
investigation
that
as well.
it is a simple like asset and
Yeah.
liability divided by
So,
outstanding
Chaitali,
shares.
I get it. See, this is
But if you
exactly
see
what
a
I
pure,
discussed with
I
the
mean, private equity
IT
fund, then
team,
it
RTD
would be
for
like
that
asset minus
particular entity.
liabilities.
That is what I told them. That see,
Yes,
Correct.
total
post manual batching,
investment minus
there are
total
three
expenditures in
automatic
short, because
functionalities
in a
that I
pure
need to
private equity
document
fund, you will
as a
not have any
control.
other
And
expenditures,
this
right?
is regarding that.
Yeah.
One would be a
So
feed
just
that is
check
coming in
it,
from
your
GMI
total
in
trade
telling that.
activities, then
So I
expenditures
need to have that
and cash
documented as a
process, whatever
control.
if you have
That is where I
received to
may
the
help
fund,
you with
apply
because
the accounting
those
treatment to it,
details
and then
discussed
your
would
job is
not be
done then.
having that what job
Okay.
or batch is
The
there
final one is the
right
NAV.
now.
Yeah,
Yeah.
exactly.
Basis which the
Then it's
so
required
that
to
thing that
appointment
I
of
got noted here.
technical
The
platform
second
provider
thing
as
I
well, like
is
Geneva,
the auto
Genesis, InvestOne,
reconciliation which is
Multiphone,
happening
so which
with
you can manage
everything.
your
That's
investment
again
business.
everything is automated.
And
The only thing that
agencies, different
I
agencies which can
require
provide the pricing
is
reports or
what
valuations
is
report, or maybe investment research
let's
and
say the
all,
breaks
like
Yeah.
Jeffries,
exception report
Cresil,
name or
Nomura,
not
they
exactly
provide
report,
it.
because you are
Even
taking
you can
report as
appoint one
something which
public
is
relation office as
doubtful,
well,
but in the
if
given
it is
case
required for
all
investment
of
and
your
all, so
breaks
which they
are
can
being
communicate
shown
with
on
the
the screen.
investors,
So
or
that
also
is what
investor can
technically
reach to that
helps
office
you
to
to
get
know
the investment
what
details about your
reconciliation
plans
are
and
we
all.
talking about.
And
So like you
finally,
said
here we
that
come
we just
at
go and let's
fund
say fix along
admin
the
business.
department code or just
Fund
download
admin.
for this particular
Fund,
department,
here
and
you
that
would
will
see
give me
fund accounting, so
data
where
of
we
let's say
record the journal
discharge
entries in the books of fund,
or put DC or any other, let's say,
recording of
there
journal
was just
entries
a
in the books of fund till the
payments
last
related
business day, then
reconciliation
posting
was
entries
done.
to the general
Late
ledger
payments
Yes, sir.
came
versus sub ledger. We
came and
perform the
so
reconciliation as
for
well. Preparation of
seeing the
trial
breaks of a
balance,
particular
trade book, profit and
reconciliation, we
loss
would
account
have
statement,
some kind of a identifier
balance it,
basically. That
income
is the
statement,
identifier that
fund flow statement. You would see
Do you
those
need
statements that we
like
perform in the
do
business.
you need the
Okay.
volume in the
So
starting
the
point?
recon, as we have custody for private
If
equity,
I'm
so
No, no,
recon
no.
is
I
done
don't need
between
the
accounting and
no, no, no.
custody.
I don't need the volume. I
Right.
don't need
See, recon it's
the
not
values for
any
thing. I
special
would need
process.
anything
You
which
would
is
see anywhere,
inside
middle office versus back
the
office,
setup. And
custodian
I
versus
don't
your
care if
fund
there are
book,
4,000 breaks
general
or
ledger
2,000
versus sub
breaks.
ledger,
I
cash
need to
book versus sub
understand
ledger,
if I
right?
want
Trial balance
I
versus
I
sub
need
ledger.
to
It
implement
can be
this
performed anywhere.
functionality in IMAP.
Okay, sir.
Nothing to
Yes.
do with you and
It's
me
not like
digitally.
only
I need to
custody
document
or
that.
your fund book.
That what is that
It's not about
exceptions
that.
name called?
Even though
The
you can
report
perform
name
broker
or
versus your
some
fund
kind
business,
of an
fund
identifier
account.
which will
Fund
tell me that I'm
book.
talking about the
Uh,
futures
Sir,
breaks
as a
or
far I remember,
IMAPs
I work on,
or
I mean, Frontier
CPs
for
or
this private equity
CPA
funds.
breaks or
Okay.
IMAPs.
I'm not
What
sure.
What is such
something in,
I
report?
mean,
let's
it's
say,
very long. Like
BCI
it's a
or
recon
something in
between
a
fund
medical
accounting
device
and
That
for
will
this particular purpose.
custody. I'm
will
not
come to
sure.
know
That's what. Okay.
after that
Yeah,
feed
so that's
goes
what I
into the
said. See,
IMAP
it's
It,
that
and
is a
is
one way,
seen,
but you
okay.
would see different
And
things, right?
whatever you
In
are
my team,
telling
I do
them
for a middle
based
office
on the
versus
fee,
back office. I
but
do middle office, that
when
is
I'm saying
a
as a
back office
fee,
versus cash
okay,
team.
if
I
the
do
fee
client
is from
position versus
GMI,
back office.
if the fee is from
Okay,
BCI
sir. Yeah,
client,
got
if the
it. Got
fee
it.
is
Yeah.
from
So it's not a special one that only
house
one process
maintenance,
you need to perform only against
then that
custody
depends on
versus
the
you.
fee,
No,
and those
that is a
comes
one
in a
task.
bulk. Okay,
It could be
there's no
anything.
separate
Yeah, I
file
Yes,
that
understand.
you
says
can
Like,
set up a recon
so there's
process
a
anywhere
fee
in the project.
coming from house, there's a fee
got it.
from
Wherever you
GMI,
see the risk,
there's a fee
wherever
from
you find a
BCI
risk,
client, and
potential
there's
risk
another
to missing
client
something,
file or
then you can set up a recon
So it's
process.
a
As simple
it's
as that.
combined. All the data is
Oh,
combined in the
got it,
same
Sai.
file, but I'm not sure about
Because
the
most of the
backend.
people, what they believe,
It gets all the data in the Intel match only. We reconcile in the Intel match. We don't have a separate file on top. We just publish the
okay.
EOD so that we can
No,
show whatever is
and
left
pricings.
on the recs
And coming
to
from
the
the
POs.
interview perspectives, I mean,
Apart
what
from
all
that,
like
we
practically
don't reconcile
they
any
won't ask
of the
this
other reports.
theory questions. They would be asking like practical questions.
So what is
So
Okay,
practical?
so
It means,
this EOD
you tell me.
report that we are talking
Calculation.
about,
That
and
is,
this is
we have
what
discussed it. It
you
wasn't like theoretical.
also
Maybe they
mentioned
can
that
give you
you
one
can pay
example.
on the balance
Let's
when
say
account
I
name
have
and
invested this
everything
amount,
from
received
there.
profit this amount. So
Yeah,
how
which
will you
is
initiate it?
outstanding, which
So
is
this is,
not
it is not
matched.
like
Okay,
only
that is
theoretical.
published
So
at
we
the
have
end of the
covered
day
all the
because
practical
we
aspect.
are
It
I
can be
mean
asked question
we
on
have
that is ABS, how it is
reconciled
work.
every break which
You can
was
create one
probably
example.
and which was till
Let's
date.
say
Okay,
you can take the
so that
example
is
of S
EOD
Bank. S
report
Bank had
publishing
8,000 bad debts.
combines of
So that S Bank
OTC and futures
sold that bad debts to
outstanding
the
bills.
special purpose vehicle
Okay,
entity. They
which
have
are
created
getting
Okay,
ABS,
reconciled
MBS.
or
It is not a
MBS
theoretical aspect. It is a
that needs
practical.
to
In a
be
system,
reconciled.
practical.
what we do is we just record it,
But
Yeah,
the
yeah,
data
yes, sir.
which comes in
right?
the
So see
booking
why we
or
call
the data
theoretical,
as a
because
whole, I
we
cannot
don't
predict that
have a
because even
systematic
we
way
also
so
don't know
that
where
theoretical part which
the
we can
client
convert
data
it into
where it come
different
from
examples,
because IT only knows
where
that.
we lag
The
actually.
report and all you
so
can only
Yeah,
ask
sir.
them
Are you
from
getting
where
me?
they get the data
Yeah,
and
So
yes, sir.
what is
here
the
we I have a template as well. If you see,
we at the
capital
Recon team
invested
help
was
you only
around
reconciliation,
10
matching,
million and
and
proceed received. So
reconciliation.
it means
That's
in
about it.
2025. So proceed which will received
okay, so
around
if I
30
just look
million,
at this
right?
one,
30
EOD
million.
nostro dashboard,
General partners,
this I
limited
will
partners,
this
equity
I believe
participants.
is
Equity
what
it
we're
means
talking about,
ownership,
and this will cover
Ownership.
futures as
and
well as
equity
OTC.
participants terms
So
return of
so
principal to
you
the
would have
limited partner
probably
plus.
built up
Now see, we refer such a
from
templates to
department perspective
calculate
futures
the
as well as
preferred return
OTC,
in a
right? That is where
private
it is
equity
showing you
business
all the
in this way.
Yeah, right. Yes.
This is the template which I have prepared.
which is after you've
Okay, sir.
already done
Yeah.
some
You would see
of
the
the
comment which is return of
manual matching.
principal to the
Yeah,
limited
this is
partners
after
plus an
manual
8%
matching,
cumulative
8%
return
and
cumulative.
on
we need to
principal, then
investigate or
80
are
to
under
20 split between
investigation.
LP and
So
GP.
this is yeah.
Okay,
So this hurdle rate, if I see this
okay, and then
IRR,
basically
that is not
this
in, I
particular
mean, like
report, this
private equity, no hurdle
EOD
rate, like
Nostro dashboard,
the same as
this
a,
is
a preferred
for
return, no?
everything for
Hurdle
futures,
rate.
OTC, APAC,
Yeah,
India, and
whatever that you
everything
have
on the
committed to
regions
it,
Yeah,
right?
and
So that
both
should
of
be
these,
met
right?
yeah.
in short.
Okay.
You would see that in a
So,
private equity business as well. It is, it's a
I'm just
benchmark, standard
thinking that
benchmark. In a
basically I
cumulative
already have
basis, your
this. Now,
assets
if
should
I
be
ask
grows
you
or return
for the
should be grows.
futures control evidences,
Okay.
you're probably going
There are a
to
number
send
of
me the
things,
same report, this
but
EOD Nostro
important is at least
dashboard
one model
for
that I
my
just wanted to
performance,
walk
right?
you through. We have discussed this all this
Yeah,
part.
this is the same
If you
report
see
for
Excel sheet, then
futures
would be
and OTC.
it
Yeah.
seems like very difficult,
Okay, okay.
but don't
See,
worry. So
so
we'll
okay,
take
that
only
kind of
one this
answers one
example. So
question
we have
because
discussed a number of terms.
I
Yeah.
was looking for an iMatch control as
But
to
if you see
why
the
this
term
is
which is
not
this,
got
the return of
documented
principal
in
to the
the
limited partners plus an
futures
8%
process, I
cumulative
guess it is the
return
same. That
on
is why it's not
principal,
very
Yeah,
then
futures
80 to
and
Yeah, that's
OTC
what.
20%
are
got it.
split.
same. Yeah, it's
Principal, limited partners hurdle rate. See this preferred
both are
return would be
same.
your
8%.
hurdle
Okay,
hurdle
There
rate.
is a
okay.
differentiate
So I
between
Ah,
the
hurdle.
basically
departments.
8%. See, at least if you want catch up, if you
okay.
want carried
So
interest,
what I
then
needed
minimum
today
requirement is
was
you should, means as a fund manager, you should deliver
uh,
8% return, preferred return to the
So
Prefer
one
the
more
limited
question
partners.
limited
here.
partners, and then after you
You
can
need the
apply your
data which is
contribution.
outstanding
But
from 9th
here
August or
the
which is
internal rate of
matched.
return achieved.
Client side.
uh,
IRR sheet 26.
no,
Okay.
I need first of all
How?
what is outstanding is
If you
one,
see
and also
the
one
limited
factor
partners
what has been matched.
contribution,
Because
pay the first
then what I'll do is
100%
I'll just pick
return the
up one
capital to them.
sample out of the
Correct.
unmatched and keep the
So
matched one
amount
as
goes
a
around this.
documentation
Net was around,
that
principal
this
was
was
this,
matched. So if I
principal
can
plus
get
preferred
of
return, the
the
amount
the
which would be
original,
around
and let's say there were 1000 entries in the
14693
initial
281.
unmatched. Can I get that data?
Here we have distributed that
What data? What means data?
14693
Yeah.
100%
The
return it.
unmatched.
After that, if you see
Let's say
remaining
1000
process,
not
Remaining.
matched
That could be
via auto
distributed.
matching. So you had, let's
yes,
say, 1000
and
data
The
thousand
second
allocation
distribution, now it's
matchback,
time
right?
to distribute
And
it.
to see
First
if there was
distribution,
genuine breaks or
we
not.
have
Can I get
returned
that
the
data first?
entire
No, no, no.
principal plus preferred return
Because matched
to the
item that
investor,
You
goes
cannot.
in the
or it can
archive
be general
section, they
partners
can
as well
match.
if
Those who
their
knows, we can't do
contribute,
that.
if they
And
had
even if we give
contributed
the data from iMatch,
in
so we
capital.
cannot provide
Correct?
that in Excel.
Yeah.
That's
It's
how we
not
can say you
possible.
can match with the
Okay.
general
So
partners,
basically,
limited
what would
partners.
now be available is the outstanding ones,
Yeah,
Now,
because
this remaining profit you can
after
directly
what was
split
manually
into
matched in IMATS, whatever is
20%
left is
would
the
be
only
for
thing that we
general
would have
partners
available,
and rest
yeah.
would be for
right?
limited
Okay.
partners.
Okay, then you
See
can
their
give me that,
contribution.
whatever is
Out
left
of this
to be matched
investment,
as on 9th August,
10%
and what
profit
was the
will
step
received
taken, or how was
to
any
the
one sample
general
General
partners,
calculation,
partner.
Okay.
and
and
limited partners will receive
whatever is long outstanding,
89.8%
weekly, I think
total,
weekly
which is
void
this.
and all you've already set up, but that is
Eventually,
for
your
July.
job is to record
If you can
this
just,
portion in the books of
again, you have
investor,
weekly
as well
median
as
work, right?
you need to record this portion as well
We
in the
can have
books
that,
of
right?
investor, as
Less
well
than
as in
long
the balance sheet
outstanding,
as well
right?
Yeah,
eventually.
yeah, we have it.
And it should be zero.
Yeah, yeah.
After
So
this
just to,
distribution, there shouldn't be any value in the books of
Sneha will
account.
provide that. I'll provide it
Okay,
with the
okay.
screenshots.
Okay,
And
perfect.
same instructions which you can send it to the
okay,
cash
And
team.
the Sneha will provide. You can ask her once. Okay.
okay.
You can
No
send it to the
issues.
cash team.
So
So
whenever
one is the
there is a
same thing. Okay.
distributions, eventually we
Client
will record it, and
and house.
like we have to send
We
it to
need to
cash
give
team
those data, right?
to
Yeah.
for the proceeds.
Right,
Fund
yeah. Client
accountants,
and
they
house.
calculate it. After calculation, then you can
And
record it and then send the instructions.
Chinali, one
Otherwise,
thing,
how they
I
will
had
process
another
it?
question
Ah,
on this
correct,
one.
correct. Yes.
For
Cash
house,
team, they
do
will
we
not
have
process
anything
on
on the
their own. So they
CCP
required
side?
instructions from you.
Yeah, we have it.
Is
Yeah,
there
correct.
any?
So we have to
Have you?
calculate and send the proceeds
Yeah, we
instruction
have
to
What is the
Exactly.
typical
process
quantum of that?
to cash team.
The same
it.
example, if you see, same
The
example,
volume.
the little, there is a change
Yeah,
with
yeah.
return of principal to the limited partners plus an 8%
It's less
cumulative
than the
return
client versus
on principal, then 20% full
GMI.
catch up for ZP, equivalent to the
This is
20% of
Okay.
all distributions, including and up to this step. Finally,
House
ETN
versus
20
GMI
split
we cannot
between
give.
LP and
House
GP.
versus GMI is one
This is the comment which you would see.
house versus
Investment
that is
is
called
same,
internal
profit again
reconciliation.
same, there is no change in
Okay.
it. Hurdle
Client
achieved.
versus GMI we can give it. House versus
Now at the time of
GMI
profit,
we
pay
would
first.
reconcile that.
First profit, it means return the 100%
It's
of limited
house
partners.
it's
Okay,
you can
I
say
For
got
capital
internal
call, yes.
Capital
transactions.
plus preferred return. You
We
have
call
returned
Preferred
it.
rate.
okay.
Barclays internal reconciliation. Okay.
Right, I thought that is what was explained. It's okay. I think you can give
Yes.
me a client
Then
versus
profit, remaining
GMI.
profit would be
Yeah, I'll
remain
give
same. But
that.
here the twist
And
is on
we
this
Yeah,
can
yeah,
amount
that's
we are
base on
charging
that for whom we
20%
profit.
as a first catch up. It's like an incentive fees.
yes,
Yes,
yes.
correct.
One sample
And
EPS profit
remaining
was
profit would be
basically cleared.
around
Screenshot of this.
1163399. On this amount we are again charging third distribution, which is
How the
20%
break was
to the
cleared.
general partners and
Total
limited partners.
outstanding.
Remaining amount, which is
Total outstanding
80%,
summary will
total would
show.
be this. Here you would
We
see the
all
match.
the
And
summary
here the
code bits
important is the final instructions will be sent
that
for
will be
20%
in EOD only. You
and
can check
80%
the
directly.
subjective.
See this.
That's okay.
There is a
So
change in the
basically,
amount.
what I wanted to know
Here,
is the summary, the sense,
only
what is the
10% profit will
presented
receive
in
to
the
the fund
PPT deck,
managers.
so that I get a whole picture.
Yes.
But I guess, yeah,
Yeah,
you're
it's
right,
there in
because
the
I
EOD
believe
This
only.
catch
supplementary
up
is only
should be
presented.
mentioned in the
Yeah,
term
this
sheets,
is
no?
that's what
Exactly,
At
we
it
the
should
entity
be.
value.
Otherwise, how will you calculate if there is no
so you can
mentioned?
consider that as
Yes,
a
sir.
summary.
Oh,
So the default, like, so the average catch up percent is 20%
okay,
to
Default, it
the
means standard one.
that's fine.
standard one, to the, sorry, yeah, to the general partners.
Yes.
So, Chinali, coming back
So
to
if I say, if
this,
I collate
this
it for the
ask that I have.
waterfall or
Can
distribution
you tell me
process,
the
first
environment name?
come the
Because I think
proceeds, first is
IMATch has
capital call,
IMATch
that
8,
is returned to the
IMATch 9,
investors,
Classic.
Hmm.
limited partners.
Hmm.
After that, the preferred returns,
Yeah,
I
futures
mean, the
have
standard is
IMATch I
8%
exactly.
to the limited partners.
futures
The
have
remaining
four
will be
environments.
the from the remaining,
Classic
the
Okay.
and
20%
normal.
catch up has to pay to the general
In
partners.
classic we have other
Hmm.
four
Once that is
companies,
paid,
RT and
out of the
SLM.
remaining 20-80% is distributed between
Last
80,
one we
GP and
have
LP.
IB Cash,
Yes.
and in I am Life Corp we
and this was about your
Got it.
practical things, how you can calculate. And in a question, see, you would expect question on this calculation part.
So,
That doesn't
so
mean
how
you
does
should pick
this
complex one.
work?
So
Is it just a
always pick
single
the
No, we need
examples,
to again
small
single
examples.
code
Prepare
or
the
how
small
does this
examples
run
for each terms,
in the
right?
different windows?
Yeah, we need to
Yes.
log
And
into
then
each
explain to it.
IntelliMatch separately, then check.
And always while answering to the question, so you can
Under
prepare small examples with
there are
the amount or percentage should be in
departments,
like
right?
10%, 20. It shouldn't be like 5 or
So
2%. So
even
it would be
if
difficult for you to calculate
we
it
need to
then.
reconcile, we need to check
Correct?
Yes.
what
Yes.
are
Got
the
it.
That's
days
how you
under
can manage your interview. Focus on product as well.
departments.
Apart
For
from this,
example,
you
in
should also
human
focus on
cost, there are
derivatives
number of
product
trades in
in
equity.
details. I know that the interview
Similarly,
is
we
for
need to
only
check it in
your
IB cash as well.
private equity cash reconciliation stuff, but you would see the link of
So
derivatives,
how do you get
especially
this
forward
consolidated
contracts
picture
and
here in your data?
swap contracts in a
This
private equity
this is
business
from
also,
I think
to mitigate
Delphi,
the
right?
risk and all.
So
So private equity
it's
fund
more than
managers,
the
they also
equity is
signed or enter
under
into the
futures.
derivative
Uh,
OTC derivative
Very
product as well.
in any other
Apart from
company,
that,
whether it's in
in
IB
detail
or whether
information
it's in
about
global, it pull all the
private
data
equity, preference equity,
related to
common stock also, which you would expect, and their valuation process also. Valuation, it means fundamentals that you
right.
should know
same
at least
goes
So
with
it
basic.
basically pulls from all the other
Equity valuation we
items.
calculate on the
yeah,
basis of
it bases all the
market
data.
price, but bonds
Got
and
it.
all on the basis of profit that we received,
Okay.
right? So
Yes.
all these areas which can help you to crack the interview, and the important is then
Anything
your
else, Garima?
way of demonstration. Don't
No, no,
pick
I
any
think that's
complex
okay.
examples while answering. This is my
Just
humble
still
request.
struggling with the
Got it. Yes,
exception
sir.
report, but you
This is
mentioned
the
that you
best way to
basically fill
explain.
all
There
the
is nothing like
departments
theoretical
to
and
get the
practical.
total
It is
exceptions.
all about how you
Yeah.
demonstrate.
Okay, sir.
Okay, which will
We
be
have
crucial.
defined
And
that, okay, this is
if I
theoretical.
want to
Then
just
you tell me
mention
what is
that as
practical.
part of the control, can I just mention this word
Then we
Yes.
again
equity
remain
and
silent
OTC?
because
These
we
are the
don't
two
have an answer.
departments.
The reason is we
Yeah,
don't
you
know the
can.
reality.
You can.
Yes.
Right?
Correct.
Okay.
And apart
This
from
is
that,
exactly
prepare
what
the
I'm
account.
actually
You
looking
may
for.
expect
That
question on accounting
you
entries
fill
where
all that the
prepaid
exceptions are
expense,
shown.
accrued
In
expense.
futures, there is only one
Browse
department,
the
but
Google
in
or
OTC, there
internet
are
and see it,
four
check
departments.
it, or else refer my blog. Already I
Can
have
I see
posted.
somewhere
Reconcile.
here
Check the
the
this
Yeah, you
blog.
can
code,
see
department codes?
OTC,
Of the
OTC
website.
Credit Hub, OT,
Yeah, I have a website as well.
OTC, and London OTC.
Departments.
Yeah.
Uh,
So here you can see only
this one?
OTC and
Not
futures.
this
Yeah.
one. Mm,
Swap
This one, I
credit.
think. These four one.
Five. Yeah.
This is the one. Department code, right?
Yeah.
Okay, I'll probably go back to the IT person who asked me to go back to you and check if this should ideally be sufficient for them
this
to
one. This is
understand
my
what we're looking
website.
for.
Yeah, yeah.
Okay, thank you
You
so much,
can refer
Sonali.
the
This
different
really
blogs for
helps. Thank you
private
so much.
equity as well,
Okay.
And if on that email you can just
because we
come
have
back to
discussed
the
a lot of questions
environments,
and answers in this
the
throughout the
iMatch
blogs
environment, this one.
for a different things.
Yeah. Okay.
Waterfall
Yeah.
model,
Okay. Thank you
everything
so
which you
much.
would see here.
Yeah.
Okay, thank you.
Private equity blog,
Okay, bye
Can
bye.
I
and
do
refer
this
this blog
by
for accounting
evening, Garima,
entries.
if possible?
Yeah, yeah, sure, sure.
Yeah.
Yeah,
Thanks.
no
Okay.
issue.
So
Okay,
for the
thank
journal
you,
entries,
Sonali. Okay,
especially I
Yes.
like. I'm in average in journal entry. So for the basics or for the common questions, I can answer. If they twist something like I'm like, so that is the main
You may expect
challenge.
question on golden rules of accounting, and then prepaid expense and accrued expense. So here I have given you the all the accounting entries.
Okay. So there
Prepaid
is
expense.
one question like transfer from one investor to different investor. So I check in Google back. I could not find like relative answer to the private equity.
Transfer of partners.
Transfer of the partners. Definitely. So what could be this one general entries like transfer from one
General
partner
entries
to
like,
different
see,
partner?
first of all, close that account for a particular investor first. When you've received fund from
Uh-huh.
investor, how you record it? Cash and bank account debit to
Yeah,
investor account credit.
investors account.
And then if you want to return it, investor account debit to cash and bank account.
Okay,
Correct?
for the closing one. Okay. Yes,
Close, then that the account will be closed, and again prepare the account, same accounting entry will be there after the close. Cash and bank account debit to that the another one B account investor.
the account. Okay,
Transfer
sir.
of
Yeah.
partners. Simple. And the rest accounting entries and accounting treatment which you would find here with this blog. Very soon this blog will be locked.
Yeah.
I'll share this with you. Go ahead, check it,
Sure. Sir.
and enjoy it.
Thank you, sir. So actually, from past few months, are giving private equity. Only the last one I don't know I stuck up.
Okay. And I'm sure this session will help you a lot to answer to the questions as well.
Yeah, obviously, obviously.
How was the session, by the way? I would like to take a feedback from you.
Sir, it was frankly speaking, it was really helpful. So I read many posts, I see YouTubes, but they feel like complexity. So when I have interaction with you, I feel like it's very easy. I mean, although I work only a few months in private equity, but it's very much like helpful to me.
Okay. Okay. Because your feedback is important for us, so which help us to improve our my knowledge as well. Okay, or to explain the things in again, because always we focus that how we can simplify the complex concepts, finance concepts,
Mhm.
so which can help the audience to understand that in easy way.
Yes.
And maybe you would have question in regards of that the fundamental analysis or market analysis in a pricing part. So this site which you can refer to calculate the price of, let's see,
Okay.
if you want to calculate, there is no price prevail in the market and now you're looking for a pricing,
Right.
then you can calculate the pricing through enterprise value.
Fair value,
Yes,
enterprise.
mode, median mode, enterprise value, sales model, or EBI, earning before income tax, depreciation, tax. So you
Yeah.
can refer this. And here if you see, as on August, it's a current value, means Wipro is trading at discount of 6% based on the estimates of median intrinsic value. So now Wipro
True.
is in the line which you can buy it.
Okay, discounted price.
Exactly. But I don't think so. It would be good deal because current market price is 420, and now again that is below that. So it means which is trading at discount. Fundamentals, on the basis of fundamentals, you can calculate the price of that particular security. In short, what we required, which is intrinsic value of a securities. Intrinsic, it means real value.
Real value, actual value.
Yes. Most of the time you would see the blog on intrinsic value and all, and that that creates confusion in mind. Okay, what is that terms and all? But simple. Your intrinsic, it means real value. Market, it means it's a speculative value, that the value or
Yes.
price has been increased or decreased through the market speculations or spread.
Demand and see. Yes.
Yes. Anyways, I'm done. And for your interview, product knowledge is must. Your OTC product derivatives, their valuations, pricings, right? Accounting entries would be in key focus. Prepare the accounting entries. Practice it, I would say, and then your process. And apart from that, the way how you introduce to the panel, it should be in a
Okay.
professional way. How many years of
Uh,
experience that you have?
9 years.
9 years. And what about your current position?
Current, I am in AM, assistant manager.
Okay. then yeah, so it should be like very professional way, and you shouldn't be lag in a product knowledge, to be honest, because if you're carrying any let's say you're like holder, that is assistant manager or management holder, then they will have a lot of expectations from you. Your next
Uh,
position would be maybe AVP 1 or 2, or it can be
yes.
IC if you have a less that is AIM experience, that is depends.
So, but from the this one private equity accounting perspective, so what are positions? I mean, like for the derivatives, it's not like a hedge fund accounting, right? It's private equity accounting.
No, you
So,
see, I cannot cover everything because this 2 hour session, but still.
uh,
So you would see OTC product, it means I'll give one example. You are in India and your fund is like international private equity fund, and you are raising funds from US, UK, Canada. So it means you're gonna receive fund in a different currencies, correct?
correct. Yes.
How will you mitigate the currency risk when you receive fund in a USD, Euro, and then CAD?
We purchase the straps, currency straps.
Why purchase swaps?
Yeah.
You will have to sign or enter into forward agreements, or it can be future as well, or maybe put and call spread. That is depends. The reason is, if let's say your main business is INR, right? But you are looking fund from international communities as well. What if the dollar value will goes up and your currency value depreciate? Then think about it. I know, although it is a private equity business, but you would see the big relation with OTC product, derivatives product of a private equity business. How will you mitigate the risk? Then you will have to enter in your hedge contracts. How
Derivative
you can
contract.
hedge
Hedge.
your currency transactions, whatever that you have received from international communities in a different currencies.
Okay. Hedge contract.
That's the process. And that exposure you would see on a financial statement as well. There are a number of things, but all the key areas I have covered
Yes.
within examples. You can also refer the same way to explain, and definitely you would crack the interview as well.
Yes, sir. Got it.
Okay. So any other question? Because I'm done now.
No, sir. I will just go through all those. I mean, what you have in videos.
Yep.
Uh, I think I will be fine. But pretty much I'm good with right now. Just this one, as you told, like derivative contract. So hedge funds I never work, but yeah, on mutual funds, as you know, there is no derivative. But yeah, we'll go through the videos. It
Yeah,
will
yeah.
be
Please
helpful.
go through it. I have uploaded several videos on a derivatives part as well. See
Yeah,
if
sure,
that
sure.
can
I will.
help. Okay. And if you like this initiative, please refer to others as well. Let them also learn it.
Yeah, sure. Today only I just refer a friend your, I mean your website.
Yes, Satish, I think, is
Will
Satish
be-
your friend?
No, no, not Shatish, a different friend. I mean, like
Who have referred you?
colleague only. Actually, long back I came this one videos, but by the search only.
Okay, okay.
And yeah, and one of my friend told me like Chandraji told me that this
Okay,
one is.
okay.
Uh, i- if you want to switch, we have a good knowledge on the basic, so I just refer that.
Anyways, we also gonna run the crash course on fund accounting stuff maybe from September. 10
You,
hours series. If we get enough registrations, then batch will start from first of third of September, weekend batch. Within a 1 month, we'll cover all the important areas from mutual fund, hedge fund, and private equity part, and even though
uh,
product knowledge as well.
yeah, sure, sir. I know many of based on the mutual fund. So as you know, this market we don't have like more of mutual fund jobs. but they have of hedge funds and private equity, so I think it will be helpful for most of them. Yeah,
Okay.
definitely I will refer my colleagues and